Hey guys, welcome back. It is Cole and Kelly with the Bridge Group, and it is time for our monthly market update. Today we're going to be discussing May 2022. Always remember that our monthly market update is kind of in the rears.
Yes,
We have the
a
month
month
before.
behind.
That way we collect all the data and we're able to speak to it. However, I will say that what we've been seeing is from May to June, or now, as we're already kind of a little bit past the midway mark of June, things have increased, kind of going in the same direction as far as inventory. We're going to talk about what it looked like for May, and we can address it a little bit already for June.
A lot of you guys heard the news that interest rates spiked last week. They went up by again, but this time like the most that they've ever gone up, which is about 3/4 of a point. And so right now they're hovering around 6%. So it's definitely gone up a lot just from the beginning of this year, and it's affecting people's buying power. You know, the government is trying to adjust for inflation and make corrections where they can. This is what they're doing, and we will expect them to rise the rest of this year as well. But we have a few tips for you guys as buyers that maybe can offset some of these interest rate spikes. But first, we're gonna go into some of the numbers for May. In terms of price point, single family home prices have risen by almost 15% from this time last year. The first time we ever saw them over 400,000 was in March of this year, and now they're at 440,000.
That's crazy. I remember like 7 years ago that it wasn't even over 300,000.
Yeah.
It was like 278 or 293 or something like that. And in 7 years, it has gone up significantly more. And so this is kind of where things get a little hairy as far as the inventory. And that's only if you're a seller. If you're a buyer, you're just like, oh God, now I get a break, right? Interest rates have gone up. The break for a buyer is if inventory goes up. Inventory has gone up from 1.3 this time last year to 1.6. Which doesn't seem like a whole lot. We're still sub 2, but 1.6 in May of 2022. Now, I can say that it's probably closer to 2, if not just a little over 2, as we're making this video in June of 2022. So sellers, look, you cannot overprice or aggressively price your properties any longer. If you wanted to do that, we need a time machine. We need to go back in time about 16, 18 months. We have to price according to the market and very strategically in order to get, number one, the property sold quickly, and number two, the property sold for the highest dollar amount that the market has to offer. Kelly, you mentioned some tips in the very beginning of this this video. I'm a buyer. Interest rates are high. What are some things that I can do to lower that interest rate and to make my monthly mortgage payment easier to swallow?
So as we start seeing this slight shift in the market, there will be properties that will not have multiple offer scenarios. So you'll have a little bit more leverage and wiggle room in terms of that price. So that's one thing to keep in mind. The other thing is a lot of buyers have been offering things like paying for the owner title policy. That's several $1,000s. Made your offer stand out amongst all the other buyers. Well, if you're the only offer on the table, you don't have to do all these other things to create a winning offer. So one thing that you can do is instead of paying for the owner title policy, you can use that money to buy down your interest rate. Use points to buy down your interest rate and save you money in the long run. Another thing that we are personally doing on a property that we are buying is instead of doing a 30-year conventional loan, we're doing what's called a 10-year ARM loan. And so that locks in our rate for the next 10 years. We'll either sell that property before 10 years or we'll refinance it, or it only goes up a very minimal amount over the following years after that 10-year mark. So there's a lot to learn about that particular loan product. We'll love to have one of our lenders on next week or next month to talk to you more about it.
Well, the good thing about it is it's significantly lower than the market rates.
Exactly.
So, you know, you might think, oh, that's a little risky because after 10 years, well, 10 years from now, I might not even own that property. So like you said, sell it or refinance it.
Absolutely. So we hope this was helpful, a little bit of a market update for you guys. We're going to be keeping you up to date every single month, as we always have in the past few years, about what the market's doing. It has definitely changed a lot and shifted a lot just in the past few days, few weeks. So we will be keeping you up to date. But if you have any questions about your particular situation, whether you're looking to buy or sell or lease in the Houston area, the Bridge Group is here to help you and walk you through every step of the way. We'll talk to you soon.